Welcome back to the Deep Dive. Today we're jumping into something pretty fascinating, a name that's really making waves where AI meets DeFi, AIFEX, or AIFEX. Now, this isn't just, another token launch. We're going to unpack it like a strategist would, a global crypto DeFi strategist, actually. Our aim, to really get under the hood of AIFEX's vision, what makes it tick, its unique strengths, and frankly, the huge potential people are talking about. Whether you're new here or you've been in the DeFi trenches for years, this should give you a clear picture. Okay, let's get into it. Why all the buzz?
Well, it's interesting you start there, because even before you dig deep, the surface-level data, say from around August 24th, 2025, tells a very deliberate story. It's quite compelling. You see AIFEX trading around, $18.23, market cap about $3.05 billion.
But here's the kicker, the really crucial detail. Its fully diluted valuation, the FDV, also exactly $3.05 billion.
Okay, hold on. FDV equals market cap. That's not typical, is it? What's the significance there? Exactly. It's not typical. Usually the FDV is way higher, signaling, future tokens hitting the market, potentially diluting everyone's holdings. When they match perfectly like this, it screams tight control over supply. It's a powerful message to investors saying, look, no hidden dilution coming. What you see is what you get. It signals a really responsible, predictable supply management right from the start.
Right, that makes sense. Predictability is key. And then there's the liquidity pool. I saw the number. It's huge.
Huge is an understatement. We're talking $1.43 billion sitting in the liquidity pool.
$1.43 billion. For a relatively new project that seems unusually large. What does that tell us? Is it all good news?
It tells us a lot. Primarily, it acts as what you could call proof of capital. It's a massive confidence builder. For your average retail investor, it's like, okay, this project has serious backing. It's not just smoke and mirrors. And for the big players, the institutions, it signals stability. It means they can potentially move significant capital in or out without completely wrecking the price. That's critical for them. Liquidity equals trust in many ways.
So it's about demonstrating financial muscle, essentially.
Precisely. It shows they're serious and well-funded for the long haul. Now, your question about caveats, is it all good news? Well, you always need to understand where such large capital comes from and how it's managed. But given AIFEX's apparent transparency, it suggests a well-thought-out, solid foundation.
And it looks like that confidence, that capital, is translating into users. The growth numbers are pretty staggering.
They really are. Nearly 7.4 million global community members. And almost 300,000 unique holders, 297,338 to be exact. That kind of growth so quickly, you'd call it parabolic.
Is that just organic hype, or is there something built into AIFEX that's pushing that growth engine?
It's definitely a mix. There's organic interest, for sure. And it's also fundamentally driven by the token's mechanics. AIFEX has this really powerful deflationary system baked in. Think about this. Over 42 million AIFEX tokens already burned, gone, forever, and it's ongoing. Around 60,000 AIFEX are burned every single day.
60,000 a day.
Yeah.
So the total supply is actively shrinking.
Constantly shrinking, which, basic economics tells you is a key part of its potential long-term value. It fuels interest, definitely.
Okay, so the foundation looks solid. Controlled supply, deep liquidity, rapid growth, deflation. But let's dive deeper now. Strategically, why are these numbers important? What's the core idea that makes AIFEX different?
Right. This is where it gets really interesting from a strategic standpoint. The core differentiator, number one, is those deflationary tokenomics we just touched on. It's not just deflation, it's profit-driven deflation. The system burns AIFEX daily based on how much profit it generates. So the more successful the system, the faster the supply shrinks.
So it's like Bitcoin halving, but constant and tied to performance.
Kind of, yeah. It's a good analogy in terms of the effect increasing scarcity.
Yeah.
But unlike Bitcoin's fixed schedule, this is dynamic. It responds daily to the ecosystem's health and profitability. This profit link is key for sustainability, you see. It's not burning based on something arbitrary. As supply dwindles and if demand keeps growing, well, value tends to follow. It's designed as a scarcity play.
Okay, scarcity through profit-driven burning. Got it. What else? You mentioned the capital earlier.
Yes, number two is credibility through capital. That $1.43 billion pool isn't just a number on a screen, it's a massive commitment. It tells potential investors, especially the bigger fish, we have the resources, we have staying power, this isn't a quick flip. It builds profound trust. It signals serious long-term ambition.
And number three must be the user growth.
Exactly. That exponential growth, nearly 7.4 million accounts, that doesn't happen by accident.
Yeah.
It shows the core idea resonates, attracting both everyday users and, significantly, whales, large holders who are staking and participating. It creates a powerful network effect.
How are they driving that growth specifically? I heard mentions of referral programs, VIP structures. That sometimes raises eyebrows, doesn't it? Makes people think of MLMs or pyramid schemes. How is this different?
That's a very fair question and an important distinction. Yes, AIFEEX uses referral and VIP programs to incentivize growth, but the crucial difference is where the value comes from. In problematic models, value comes almost entirely from recruiting. Here, the core value, the profit generation, comes from their AI-driven financial operations, the trading, the arbitrage. The referral programs are accelerators, basically pouring fuel on an already burning fire. They're not the fire itself. Remember, the daily burn is tied to system profits from that AI activity. So the rewards flow from actual economic generation, benefiting all holders, not just recruiters. That transparency and utility make the difference.
Okay, that distinction is critical. So the AI is doing the heavy lifting financially. Let's talk about that AI in the bigger picture. What's the global narrative here? Where is AIFEX trying to go beyond just crypto?
The ambition here is, well, it's huge. They position themselves as DeFi 3.0, integrating sophisticated AI in a way that's fundamental to the operation. So if DeFi 1.0 was basic lending, 2.0 was yield farming, and DAO's DeFi 3.0, in their view, involves deeper real-world links, capital efficiency, and this kind of advanced AI management. When they say sophisticated profit management or quant trading, we're not talking simple bots. The idea is machine learning analyzing vast amounts of data across markets, executing complex arbitrage and trades faster than any human could.
And that AI performance directly fuels the token burn we talked about.
Precisely. The AI's ability to generate consistent profit is what sustains the deflationary pressure. It's the engine under the hood. But the really transformative part, bridging to TradFi, traditional finance.
How so? What does that look like?
They have stated ambitions to list on major traditional stock exchanges. Think HKEX, the Hong Kong exchange, and even NASDAQ.
Wow. Listing a DeFi token on NASDAQ. That sounds incredibly difficult. Has that even been done successfully?
It's a monumental challenge, frankly. It involves navigating a minefield of securities laws, regulations, compliance things most crypto projects actively avoid or can't handle. If AIFEX pulls this off, if they actually get regulatory approval and list on these major exchanges, it would be one of the very first DeFi projects to truly, legitimately bridge that gap in a regulated way. That's the potential game changer, not just for AIFEX, but potentially for how the entire financial world views these digital assets.
Okay, that is genuinely audacious. So
It's-
if they manage this,
Yeah.
what does it all mean? What are the big implications if this vision plays out?
Well, strategically, AIFEX stops being just another crypto coin. It becomes something different. That controlled supply we discussed, FDV, MC, the daily burn, these are signals institutions understand and appreciate. It contrasts sharply with older DeFi projects where tokenomics were, let's say, less predictable. It makes AIFEX potentially more palatable for institutional money.
So more attractive to big traditional investors.
Yes, and the grand vision, the ultimate goal, seems to be evolving into a global AI DeFi bank. But crucially, one that's legally recognized, potentially publicly traded via those IPOs on HKEX and NASDAQ. It's blurring the lines, taking the innovation of DeFi and wrapping it in the regulatory framework and capital access of TradFi.
A regulated AI DeFi bank. That's a paradigm shift. But many ambitious projects fail in execution, right? Especially crossing into regulated territory. What are the biggest hurdles you see? What could stop this?
Absolutely critical point. Vision needs execution. If they succeed, you could see AIFEX treated as an entirely new asset class, something that blends crypto's innovation with TradFi's structure. That potential shift in perception is why some project it could become a top 10 crypto asset. It's bold, but the strategy is there.
It's a compelling story. But we need that balanced view. What are the major opportunities versus the major risks here?
Okay, let's lay them out. Opportunities. First, the scarcity play. Continuous profit-linked supply reduction is powerful for long-term value. Very appealing. Second, the network effect. That massive, fast-growing community creates its own momentum and demand. Third, institutional appeal. The AI narrative combined with the IPO plans, that's unique and could attract serious capital that usually stays away from DeFi. Put it all together, and you see the potential for something like a BNB 2.0 or an AI Ethereum, a platform creating a whole new kind of regulated AI-managed ecosystem.
Okay, those are significant upsides. Now, the risks. What keeps a strategist up at night looking at this?
Right, the hurdles. This raises the crucial question, how do they navigate these? Because the risks are very real. Number one, regulation. This is the big one. Trying to IPO a crypto entity on NASDAQ or HKEX. It's a regulatory labyrinth. You're talking KYC, AML compliance on a whole different level than crypto exchanges, potential securities classification battles in multiple countries, massive legal costs. It's about fundamentally reshaping to fit the old world's rules. Failure here is a real possibility.
So the bridge itself is the biggest risk.
It's a massive one.
Yeah.
Second, sustainability. They must prove their profits, the ones funding the token burn, are real and sustainable, generated by the AI, not just dependent on new money flowing in, which has been the downfall of some DeFi projects. This means transparent, probably audited, proof of the AI's performance, especially in tough market conditions. Can the AI consistently deliver? That needs to be proven over time.
And the third risk.
Competition. The idea of AI in finance isn't exclusive. What stops a giant like Binance or even a TradFi titan like BlackRock from launching their own similar AI-driven platform? Imagine BlackRock leveraging its existing regulatory goodwill, client base, and capital to create a competing, regulated AI investment vehicle. That would be formidable competition. AIFEEX needs a strong technological edge, flawless execution on the regulatory front, and deep community loyalty to fend that off. How they handle these three, regulation, sustainability, competition, will determine everything.
What a fascinating, complex picture. So let's try to summarize this for everyone listening. AIFEX. It's an AI-powered DeFi player. Its standout feature being this unique, daily, profit-driven token burn, shrinking the supply. It's got serious liquidity and explosive user growth already.
Exactly. And underpinning it all is this incredibly ambitious vision to become a future global AI DeFi bank, to actually bridge the crypto world with traditional finance through potential listings on major stock exchanges. It's about creating something genuinely new.
So here's something to really chew on after our deep dive today. What if they pull it off? What if AIFEX becomes this regulated, AI-driven financial entity operating across both crypto and traditional markets? Think about what that could mean for global finance, for how we even define asset classes, for the structure of banking itself. It's a scenario that really stretches the imagination about where finance could be heading. Makes you think, doesn't it?